In this week's market update, we have some good news for the inventory crisis in parts of Florida that may be signs of a shift in the market. But we also have some supply chain shortages that are threatening these welcome trends. Plus, US-Russia tensions intensified this afternoon, which could have a major effect on the economy and the housing market. I'll go over these stories and more in today's episode, so let's get started. Hey, thanks for joining me today. I'm Rick Harrison with MVP Realty in Southwest Florida, and in this week's housing market update, we'll look at some new data suggesting some potential housing market relief ahead for parts of Florida this year, as well as some not so great news with supply chain issues and an important insurance update that may very well negate these said good news. Plus, how the US-Russia tensions could affect the future of housing and the economy. If this is your first time here, welcome and thanks for joining me. I've got a lot of great information to share with you today, so let's dive right in. All right, so in this week's 7-day market update, I am comparing last week's market stats to this week's market stats, so these are up to date. I know I missed last week's market update, but these are current over the last 7 days. So last week we were at 635 new listings on the market. This week we're at 680. That is up 7%. We also went from solds last week at 671 up to 720. So that is also up at 7%. We did have pendings fall. That's down 14% from 1399 last week to 1204 this week. So we're actually still losing properties compared to how many are coming on the market, and you're going to see that in the next slide. So the total inventory breakdown: single families, we went from 1868 last week to 1866 this week. Last week's slides, actually, we were down 100 new single family homes, so now we're only down 2 this week. Condos, we went from 824 last week to 812 this week. So that's down 12. So we had a net loss of 14 on the residential, single family and condos, which, as I always say, includes manufactured homes, townhomes, everything except for multifamily and commercial. Moving on to multifamilies, last week we were at 70, which was down a bit. This week we're back up to 79, so we did gain 9 new multifamily properties this week. And then foreclosures is going to be the new one that I'm going to be tracking, because over the last several months we've had almost zero foreclosures in the MLS, and now I'm starting to see an uptick. So last week we had 7. This week we're up to 25. That's plus 18. Adam Data has said that there has been a sizable uptick in foreclosures coming on the market, as well as what they call zombie foreclosures, which are just homes that were abandoned and they're being foreclosed on. So that there is quite a bit of an uptick. It's still, in comparison to historical data, still very low, but that uptick is something that I'm going to be keeping an eye on, so that you all know as well what's going on in the market. All right, moving on to the interest rates. So we did see a slight jump for Nerd Wallets. Was at 3.881% last week for the 30-year fixed. That is up to 3.924%. So we're almost at the 4% range for the 30-year fixed mortgage. And then we also have bank rate, which is always a little bit different than Nerd Wallets. Bank rate went from 3.99% last week to 4.19% this week. So that's up 20 basis points, and that is over the 4% interest rate mark. So we do have the Federal Reserve's next meeting in March, and they have said that they are going to begin raising interest rates in March, or at least that's the plan. So we'll see how that's going to affect mortgage rates. It's not directly correlated, but usually with them being so low with the Fed rate as they have been, mortgage rates will continue climbing. So if you're looking at purchasing, keep that in mind, because interest rates are going to be, over the next 3 to 4 weeks, probably continue climbing. And then we also have a lot of stuff going on in the economy right now, which is probably going to affect mortgage rates and interest rates as well. Moving on, let's get right into the trends in real estate. I have 4 big stories for you this week I want to touch on. The first one is the Northeast Florida housing market is showing some signs of moderation. So what do they mean by moderation? In this case, it actually means that the sale price of the home, which was hovering right around 345,000 to 350,000, actually decreased. It dropped 1.4% from December of 2021, even though it's still 24% higher than a year ago. The index for home affordability, especially in the Northeast, has been around 100, and I think that's pretty much throughout Florida right now. It's been near 100, meaning that the median household income was 100% of what was necessary to qualify for the median price home under the current interest rates. They were at 1.1 months. Now we're at 1.4 months of inventory. So if this trend continues, I'm hoping that it will start to trickle down here into Southwest Florida. I think that is a positive sign. The only thing is it's going to depend on a lot of variables right now in the economy with supply chain issues, just the Federal Reserve, what they're planning on doing, the interest rates. It's also going to depend on what happens with these tensions in Russia and Ukraine right now. So just to put it in perspective, though, these are several counties for January 2022, the market data. The changes since December 2021, Duval County, the median sale price is $300,000. That's down 5.2% from December. Clay, 326, that's down 2%. St. John's, 479, that's down 2.6%. Nassau County, 368, that's 3.3% down. And then Putnam, 200,000, that's actually up 1%. So overall, you're seeing some pretty good trend lines. That's what I'm sure a lot of the buyers are hoping for right now. That's also welcome news with interest rates going up, home prices going down a little bit. That is something that buyers are probably looking forward to. However, on the other side of the coin, sellers, this is a cautionary tale. Be careful if these trends continue. Please keep checking up on these market updates. These trends do continue. Obviously, home equity, your home value is going down. Could be a relief for the tax side, tax burdens, but if you're looking to sell, obviously you want to try to get as much as you can, which means you need to keep an eye on what the appreciation rates are and the home prices are doing. So moving on, Floridians are running out of options for home insurance. This has been a big story. 5 insurance companies have decided to pull out of Florida, leaving a lot of homeowners with no or very few choices in providers, and also increasing the prices of premiums. So lawmakers are trying to work on a solution right now, but it's a bit controversial because a lot of homeowners feel like it's giving the insurance company the incentives and benefiting them at the homeowner's expense. So just to put it in perspective as to why these changes are happening, out of the 52 insurance companies that are providing for home and flood insurance in Florida, only 3 of them last year were profitable. The rest of them combined lost a total of $1.6 billion. So that's why a lot of the companies are moving out. I'm not saying that's due to Southwest Florida, but just based on the hurricanes, the damages, things like that. Most of them actually outside of our area. That is the reason why a lot of the companies are moving out of the state and deciding not to have policies for homeowners. So what this has actually done is it's caused a majority of homeowners to have to use Citizens Property Insurance Corporation, which is considered the state's insurer of last resort. As of 2020, there was only 222,000 homeowners using Citizens. Now there is over 777,000. So quite a significant increase over the last 2 years that are using Citizens. So until things start to change, expect to really pay attention to home insurance. That's why it's very important if you're working with a real estate agent. Make sure even before you put an offer in on a home that they're getting quotes for you. Also do your own due diligence. Make sure you shop around for different quotes, different companies, see what they can offer you. I'd hate to see people, fall in love with a home and then they find out that, the roof is 15 years old. So the home insurance company is not going to, insure it, or the premiums are going to be ridiculously high. I've seen, $7,000-$9,000 premiums per year on homes that are, 1,500 square foot single family homes, just because the age of the roof, they're not insuring that anymore. Another thing to pay attention to is anything over 10 years old is starting to become more difficult for insurance companies to find insurers that will provide the policy and underwrite the policy. So anything over 10, do your due diligence, make sure you shop around for home insurance before you put in an offer. it could really affect your entire deal. Some other news. So some interesting stats that I thought were worth sharing were the building permits. This is just total across the United States. This isn't just Florida, but building permits are up. So we'll call it 1.9 million building permits have been pulled for new construction. The housing starts, however, is down. That's down. It's at 1.6. And then housing completions is at 1.2, and that's also down. So in this chart, you can actually see the light blue line represents the permits. That's actually increased in the last 2 months, has continued to increase. Whereas the starts is the dark blue in the middle. That has gone down over the last 2 months. And then completions is also down over the last 2 months. Now, what that's indicating is it's just really highlighting the supply chain issues that we're running into, which brings me to the next story, which is Canfor. Canfor Corporations announced the permanent reduction of 150 million board feet of production capacity at its Plateau sawmill. Most people don't know this, but last year they had a devastating beetle infestation in the wood, which shortened a lot. It decreased a lot of the available lumber that could be produced for buildings. So with that, that's actually increased the lumber prices. We'll take a look at that in a second, but with Canfor, it was a major contributor to the lumber around the United States, and they're partially closing one of their plants, and they're eliminating one of the 3 production lines in the mill. So that's going to greatly reduce the amount of lumber that can be produced there. And they're not the only sawmill that's having these kinds of issues with lumber itself, as well as just the supply chain issues of being able to keep up with production. So unfortunately, this is going to, and already has, increased the the price of lumber, which is considered a commodity. So you can keep an eye on that, but the prices have been going up, and it's gone up dramatically in the last 2 months. So that's something to keep an eye out on, because if this continues, you're going to continue seeing probably building permits stay somewhere around where they are, but starts and completions are going to continue declining because builders just can't keep up with the demand. And we're already seeing that backlog. There's been news coming out that people are starting to camp out at new construction communities just to get a lot so that they can actually put a bid in for their lots. So that's something that we will continue seeing happening. And so the last story is probably one of the bigger stories, is the U.S. tensions with Russia have just increased this afternoon. So I'm not sure what's going to happen here, but the bigger part of this is, how is this going to affect us? How is it going to affect the economy? So most people don't realize that not just Ukraine is a big exporter of oil, but Russia was our number 2. So the fact that we import so much oil, actually 12 to 26 million barrels of crude oil per month from Russia, the fact that we import so much, if we end up escalating this tension into whether it be a war or some kind of a conflict, that's going to be a huge issue for oil prices in the U.S., but not just the U.S. Ukraine as well is a big exporter of oil. And they have a direct effect to not just the U.S., but also Europe. And Europe gets a lot of their oil from that region as well. So that if that disrupts Europe's oil needs, Europe is probably going to put more pressure on the U.S. to produce more oil somehow, which we had just closed down a pipeline and have put into effect our new 2030 objective for going green, which has limited the amount of oil we're producing for ourselves. So basically, the big thing with oil is that everything in our economy really runs on some type of oil, whether it's gas, oil, natural gas. But in order for, if prices of oil go up, which they look like they're going to be, at least the futures of the market suggest that, that's going to make everything more expensive because it takes more oil, more gas, obviously, for the trucks and all the freight. How do we get that over here? Planes, trains, and automobiles all run on that, and that's how we get our goods. So if the price of transporting those goods goes up, that means that those costs are going to be passed on to the producers who are using those goods or selling those goods, which is then going to be passed on to the consumer. And then we start to end up, which I think we're already heading into, a bit of a recession right now, arguably already in one with the markets. But if that does happen, then the cost of those things going up, it puts us into a little bit of a loop where consumer price index goes up for inflation, and then the PPI goes up to factor in those increasing prices, and that in turn makes companies need to pay their employees more, so wages go up, and then CPI goes up, and then PPI goes up. So it creates this cycle, and it's a vicious cycle. So that is why the Federal Reserve is looking to increase rates rather quickly. And that's why they're also suggesting to do 50 basis points. Some are suggesting up to 6 or 7 rate hikes in the next year, which is going to, it's going to have an impact on the housing market if that is the case, and that does actually happen. It's going to decrease demand, which is going to either at least even out home prices, if not go the other way. These are just my thoughts about the direction of the market. Let me know what you think in the comments below. I'd love to hear what your take is on it and what you think is going to happen. Thanks for watching, and if you enjoyed this video, please hit that thumbs up button to let me know. And don't forget to register on my site to get access to loads of exclusive tools, data, and content like foreclosure and open house lists, buyer and seller guides, calculators, and access to our Southwest Florida MLS. If you have any questions, please don't hesitate to give me a call or send me a text at 239-310-5478. And if you prefer email, you can send one to rick@swflrelocationteam.com. Thanks again for watching to the end, and I hope to see you next week.